Hi, my name is Christian Waldegrave, Market Analyst at Teekay, and this is our LNG market update for the second quarter of 2012. And what we've seen in the last few months in the LNG market in terms of the short-term and spot sector is that rates have remained generally quite firm because supply and demand is still quite finely balanced. However, we have seen a bit of differentiation in rates depending on when the charter starts and the duration of the charter as well. So at the moment there aren't very many spot ships available to do a voyage charter or a short-term time charter. So if you wanted to get a ship to start on a charter immediately on a short-term voyage, you could probably command quite a high rate, upwards of $140,000 or $150,000 per day. However, if you're looking for a longer duration charter or a charter that starts further forward, say in 2013 or 2014, then you see those rates starting to come off more towards the long-term average, which is about $70,000 to $80,000 per day. And that's because the order book, which currently stands at about 70 LNG carriers, is going to start to deliver from 2013 and into 2014. So as those ships start to deliver, that should start to dampen spot rates, particularly as the bulk of new LNG liquefaction capacity actually doesn't come online until 2015 or 2016 and onwards. So we've got this situation where a lot of ships have been ordered over the past 18 months to 2 years. They're going to deliver in 2013, 2014, but a lot of those ships might deliver actually before a lot of those projects come online. So I think at that point the rates will start to dip a bit. But then if we look at the scenario post-2015, we can see that the demand for LNG carriers is going to be much higher than the number of ships that are currently on order. So after 2015, we've got a lot of the projects coming online from places like Australia, from Africa. And we also have the potential for LNG exports from the United States as well. In fact, we've seen the first project there, Chenier's liquefaction project at Sabine Pass. They've just taken final investment decision on that project. So the first 2 trains from there are expected to be online by, I think, 2015 or 2016. There are a number of other US LNG export projects in the pipeline as well. But those plans are currently on hold while the US government just evaluates what effect those projects will have on domestic gas prices. So we're awaiting the outcome of that, but certainly there's a lot of potential for LNG to be exported from the United States and from Canada as well. So once you get into that 2015, 2016 and onwards, we think that we could need upwards of 100 LNG carriers on top of what's already on order to satisfy demand out to 2020. So we're very bullish on the long-term prospects for LNG. But like everything in these markets, it's going to be all about timing. So that's our update for the LNG markets for the second quarter, and join us again in Q3 for our next update.